Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
15,000 new jobs. We brought out the position where we have 800,000 new manufacturing jobs, but there's more to be done. There's more to be done.
The only jobs he created are for illegal immigrants and bounce back jobs, a bounce back from the COVID. He has not done a good job. He's done a poor job.
Joe Biden stumbles through exchanges while Donald Trump makes false claims as the candidates trade barbs on the economy, foreign policy, and their fitness for office in the first presidential debate. We bring you analysis throughout the show. Traders pile into treasuries as data points to a slowing US economy. We're going to preview today's reading of the Fed's preferred measure of inflation. Plus, European leaders nominate Ursula von der Leyen for a second term as president of the bloc's executive arm. We're live in Brussels later this hour. European futures off to a positive start this morning, digesting the politics of the US. After 3 straight days of losses for European stocks, you now are pointing higher. The economic data out of the US as well, confirming slowness, at least cooling on the edges of the world's largest economy. As we look ahead to the inflation data, the personal consumption expenditures index coming out later today with an expected slowdown as well. Markets currently pricing in about 45 basis points of cuts from the Federal Reserve. To what extent does that data reshape the views on the Federal Reserve? European futures then pointing to gains of 0.3%. Here in the UK, the FTSE 100 looking to add 19 points. S&P futures up 0.2% after modest gains yesterday. Nasdaq futures looking to add 69 points. Let's flip the board cross asset. Yes, we did have a move into treasuries yesterday, giving up some of the gains today. Yields just edging up around 1 to 2 basis points, as you can see on the benchmark 10-year at 4.30. The dollar is gaining, pressuring the euro. 106 on the single currency, currently down close to 0.2%. Part of that down to what we've been hearing from that presidential debate. $86 a barrel, up 0.5%. And Bitcoin also volatile during this presidential debate. 61,000, currently gaining 0.3%. To the top story of the day then, President Joe Biden stumbling through exchanges in the first presidential debate, a performance that risks exacerbating concerns among Democrats about their candidate's ability to defeat Republican Donald Trump in November's election. Let's bring in, at this point, Markets Today anchor Bloomberg's Kriti Gupta, who was watching this debate with the analysis. And the first question is on the economics. We'll get to the style, and then there's the substance, the performance of these candidates, and then the messaging coming through. On the economy, of course, crucial for our viewers, the question of that soaring deficit and who was responsible. How did each candidate answer? What came through for you?
It is the first thing on the president's docket, January 2025. It's the first thing that they have to address is that debt ceiling. They're addressing it in 2 very different ways. They both acknowledge it's an issue. They both acknowledge that it is growing and that it is something that requires being done. It also is affecting their tax policy. And let me kind of walk you through it. I'll start with President Biden here, actually talking about increasing taxes on the wealthy, saying if you make over $400,000 a year, you are going to be getting a tax hike if he is reelected to the Oval Office. He's also talking about this chip investment story and drug pricing story. These are pillars of his current policy agenda. He's saying he's going to expand that and really create the long-term inputs that you need and eliminate some of the expenses within the states because of that manufacturing story. But something that is going to be taking years to actually come through while the deficit is still growing. By comparison, President Trump also discussing the tax story, except where he's talking about tax cuts, incentivizing repatriation of money, which again is something he named Apple on, and is also something was a key pillar of his policy when he was in the Oval Office. He's talking about oil and gas exports, even rolling back some of the spend on NATO, and of course, ultimately the tariff story, saying if you increase tariffs on China, on others as well, that's going to bring money back into the coffers.
And this is crucial for our international audience, gauging where the next US president goes on tariffs. Let's take a listen to what they both had to say on the question of those additional rates and levies.
It's just going to cost countries that have been ripping us off for years, like China and many others, in all fairness to China. It's going to just force them to pay us a lot of money, reduce our deficit tremendously, and give us a lot of power for other things.
If it's 10% tariffs, everything coming into the country, you know what the economists say? That's going to cost the average American $2,500 a year more because they're going to have to pay the difference in food and all the things that were imported.
What do you make of what they had to say about tariffs? Biden has not rolled back Trump's tariffs. Trump now looking to build on that if he gets elected.
Well, I mean, they're kind of saying what the financial market consensus is, which is that the policy hasn't ultimately changed in terms of going tough on China between the two presidents, even though they've both acknowledged that it's an issue. Remember, it's not just China that they're talking about. Trump in particular is talking about tariffs potentially on Europe as well. And some of that is really hooked to the defense story as well. And I think that's what's important here is that when we're talking about this tariff policy, so much of it is already in place. And President Trump, you heard him right there saying this is such a positive for the U.S. economy that President Biden can't get rid of them. The alternate argument of that is that policy, those tariffs came in agreement with purchases for China in terms of agricultural goods out of the states, purchases that were not actually fully executed from the Chinese as well. So that is kind of the flip side of those arguments.
Yeah, and others would point out as well that Trump is hitting Biden in terms of inflation, whilst also suggesting he's going to raise tariffs, which many economists would say is in itself inflationary as well. So a tension there, arguably. When it comes to the question of NATO, and of course there was deep concern in Europe and elsewhere as to the US commitment to NATO under President Trump. Biden has tried to put a line under that story. What do we hear from both candidates in terms of NATO and Ukraine?
Well, President Trump stuck to his line, which is that if he was president, the war in Ukraine would have never happened. He even went as far to say that if he is elected on November 5th this year, before he is actually inaugurated, he will put an end to the war. He actually said that. He didn't explain how, he didn't explain why, but it really emphasizes the line that he's been saying for the last 4 years. And of course, since the onset of the war in Ukraine, he made similar comments around the war in Gaza as well. That is something to keep an eye on in terms of how he approaches his role in foreign policy. When it comes to NATO, though, he actively talked about the billions of dollars that he says have shown up when he threatened to pull out of NATO, something that Biden really pushed back against and said, this is something that we have to stand by for the sake of our allies. He, of course, brought up the Article 5 agreement that's stand by and actually said, are you going to pull out? Are you going to favor Putin? And President Trump just said, you got to put your money where your mouth is. And that, again, is sticking to his line while he was president as well.
Pretty good, sir. Excellent. Thank you very much indeed. Anchor from Markets Today will be back with us for more analysis, of course, on this debate that Kriti was analysing, of course, from the start. And we will continue to bring the focus as well, not just on the substance that we worked through there in terms of potential policy shifts, but also the style as well, because that is consequential, given the stumbles that came through from Joe Biden, but also the mistruths, the lies, however you want to characterise it, coming through from former President Trump. Let's see how the Asian markets are faring right now and bring in Avril Hung, standing by in Singapore. Avril.
Yeah, Tom, we've been keeping a close eye on the U.S. presidential debate as well, and I think currency traders were perhaps bracing for some hawkishness to come through from both candidates. We didn't get that large of an extent, so a bit of a relief we're seeing on dollar offshore yuan pulling away from the session highs of 730.65. A bit of a gain, interesting to see, on the renminbi. But of course, today the focus is going to be on the PCE numbers out of the U.S., and amid that, we are seeing that greenback strength that's hitting the Japanese yen now past the 161 level, and this is despite Tokyo CPI. Of course, this is a leading indicator of a nationwide trend, coming in hotter than expected on the core print and making the case for a BOJ rate hike. But given the yawning yield gap, that's not helping the Japanese yen. This is also coming in a day where the Nikkei has reported that Japan is set to replace its currency chief. This is part of normal, regular personnel change. Let's flip the board and take a look at where we're seeing the stock market, because the topics earlier today hit levels we haven't seen since 1990, and this is paring off the gains quite significantly. We'll see where it ends the session, but overall it's quite a positive day, tracking the performance on Wall Street, Tom.
OK, Avril Hong with a check on the Asian markets, with the politics of the US filtering through and an eye, of course, in the inflation dynamics of Japan. Thank you. Now, a key update on the US economy today, with PCE, of course, the Fed's preferred inflation reading due later and expected to moderate. Let's bring in our MLive strategist, Ven Ram, for a preview. Ven, let's talk about that, but let's also get a recap in terms of your take on the softness that we've seen in terms of the economic data, particularly around growth for the US, as we look ahead to that inflation print.
Morning, Tom. Yes, there are a couple of points I would like to make in regard to the core PCE before I come to the economy. One is that we already know the headline CPI, we know the core inflation print and PPI readings for May. So one can generally forecast the reading for core PCE with a high degree of accuracy. So I would be surprised if the number deviates too far away from the median forecast today. Having said that, there's this economy, there's the big question of economy looming over the markets, as you just mentioned, Tom. So the big picture at the moment seems to have shifted slightly to concerns about the economy. We saw yesterday that continuing claims for job benefits surged to the highest level in 3 years. We saw pending home sales fall. So if the core PCE reading is in line with the forecast, treasuries will try to rally by a few basis points. But I don't think there is a prescription yet for runaway gains here, because while we are seeing pockets of weakness in the economy, we have seen that throughout this year, in fact, we have seen some parts of the economy cooling off and losing momentum, but that hasn't translated big time into the jobless numbers. And which is why I think that we'll have to wait for next week's non-farm payrolls data to see whether there is confirmation of the trend, the pockets of weakness that we are seeing translate into the big picture labor market data.
Okay, really interesting, Van. Not the ingredients yet for a rally in the Treasury markets, even if you see maybe moves of 1 to 2 basis points or so, if that data comes in line. PCE, of course, coming through from the US. And we look ahead, and Ven was doing this for us, to the non-farm payrolls data and the importance of that next week. MLive strategist Ven Ram, thank you for the analysis. Now, French bonds have fallen, widening the yield premium with German peers as investors remain on edge ahead of parliamentary elections in that country. This is France's 3 main party leaders squared off in the final televised debate ahead of Sunday's first round vote.
There are red lines. Sending ground troops is absolutely not requested, neither by Zelensky nor the Ukrainians. It's absolutely useless. President Macron proposed it, divided the Europeans, and worse, sent Putin some information he did not have, that Europeans are not prepared to send troops on the ground.
If Russia won over Ukraine, it would also be terrible for the daily lives of the French. Inflation would explode with the first cereal producer invading the second, energy bills would explode with more destabilization, and there would be a very significant wave of migration to Europe.
I won't let Russian imperialism absorb an allied state like Ukraine. So my position is simple: supporting Ukraine to avoid an escalation with Russia, which is, I remind you, a nuclear power. If tomorrow I become prime minister, no French soldier will be sent to Ukrainian soil.
Let's get more now from Bloomberg's Julien Pontus, who, of course, was watching that for us and brings the analysis. Julien, thanks for joining us. What stood out to you then from this debate?
It's not a game changer, really.
OK, it looks like we have a connection issue to Paris. We have lost Julien Pontus, but we'll get back to that story. Of course, the importance of the French election as well as we count down to the first parliamentary vote. It's a 2-round vote, of course, and voting in France starts on Sunday. The most recent polling, by the way, for France coming through, suggesting there hasn't been any major movement in terms of how these 3 main groupings are lining up, with Macron's party still in 3rd place, behind that leftist alliance and that leftist grouping, with the National Rally, so the party of Marine Le Pen, still polling number 1 as we lead up to the second round, the first round of voting, which starts on Sunday. Then we move on to the second round, of course. Julien Pontus, I believe we are reconnected. Julien, let's cross back out to you then. The key takeaways from that debate, again, as we head up to the first round of voting on Sunday.
It's not a game changer. I think all the 3 main blocs stood their ground. So there's a fair amount of stress out there. And as you said early on, that can be pretty much measured by the spread between French debt and German debt. It's at it touched over 80 basis points. So one interesting just key takeaway on the debates is on the future role of Macron as commander-in-chief of the army, and how the Ukrainian the situation in Ukraine and the support to Ukraine, that could be potentially a source of tension. Would it be a far-right government, and that Macron, as planned, would stay president?
OK, Julien Pontus joining us out of Paris on the debate and leading up, of course, to the first round of voting in France. Thank you very much indeed for the key takeaways. Now, another country is electing a president today. We're going to bring you the latest from Iran as 2 hardline candidates drop out. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Iranians will be heading to the polls today to elect their next president following the death of Ibrahim Raisi in a helicopter crash last month. Let's bring in our Horizons Middle East and Africa anchor, Jemana Pasechi, then for the details on this unfolding story in politics again, but in a different region. Jemana, talk us through who is in the running then in Iran.
That's right. So the polls are now open in Iran. They opened at 8 a.m. local time. They will be open until 6 p.m. today, contingent on turnout. And this has been a key bug, I would say, of the most recent rounds of presidential elections over here. Turnout has been very low, sitting at around 40%. But if it is higher, then those polls could be extended to as late as 10 p.m. tonight. We're not going to get the results until late Saturday afternoon, possibly even Sunday. So who is in the running? As it stands right now, we had two hardliner conservatives pull out of the race yesterday. We're left with four. They're up on screen there. You have Mr. Jalili, who is considered to be one of the most hardliner candidates running. Parliament Speaker Bagher Kalibaf also in the mix. And then you have Masoud Pezeshkian, you've shown right at the end there. He is considered to be the more reformist of the lot. And when I say reformist, he's reformist in the sense that other more reformist candidates or prior leaders in Iran have endorsed him. Those include former President Mohammad Khatami, in addition to ex-Foreign Minister Javed Zarif. And out of all of those put up there, he is probably the most inclined to reopen negotiation and communication channels with the West. Now, Tom, what should be noted here is at the end of the day, most foreign policy and ideological decisions, as we've spoken about in the past, are still going to be in the hands of the Ayatollah and the supreme leader. This new president, should he be elected in the first round of the elections, will be responsible for the direction of travel, perhaps on more domestic-related decisions, in addition to some cultural decisions, like, for example, the enforcement of the hijab, which is a very sensitive subject in Iran, as we know. One final point to mention is that if no candidate gets 50% at the first round, which is today, which is happening today, then this will lead off to a runoff round in July, on July the 5th. So you would need 50% to get to that threshold. It doesn't seem likely that any one of those four candidates is there, in which case we will probably likely get a second round in a week's time.
OK, important context around the vote that unfolds, of course, right now in Iran. And I know you've been watching as well what is happening in terms of the northern border of Israel, bordering, of course, Lebanon. And we got reporting today from NBC that the Pentagon is looking to move US military assets closer to the region. This seems significant. Tell us more.
It is significant, and this is, of course, citing an NBC report suggesting that the Pentagon are now looking to move key military assets. These are assault ships. 3 of them are moving closer, more east in the Mediterranean to get closer to Lebanon and Israel. And of course, they are citing concerns about the possibility of Israel going for a ground offensive in Lebanon and upping the airstrikes into the country. Worth noting here as well, Tom, that this isn't happening in a silo. There are many countries around the world who are now warning their citizens to leave. The U.S. State Department reminded American citizens in Lebanon to reconsider travel to Lebanon, and for citizens within Lebanon to consider leaving. Germany and Netherlands within Europe also have become some of the latest countries to call for their citizens to leave Lebanon as well. And there are lots of discussions taking place, it would seem, behind the scenes about how these countries can actually coordinate evacuation efforts if things really do escalate. Also, I just want to flag that our colleagues in the U.S. spoke to Amos Hochstein, who is the U.S. envoy to the region, and he was asked about Lebanon and what he sees happening there. And important to mention here, Tom, that he does actually see some link between that discussion around the Gaza ceasefire and what could potentially happen on the border with Lebanon. He seems to think that if we do get a resolution on the Gaza ceasefire, that could perhaps take some attention away, or perhaps could convince Hezbollah not to engage in a full-blown tit for tat should it go in that direction. And so the two, while very closely linked, are going to be key to monitoring what actually happens in that border in the south of Lebanon. But definitely does appear as though the stakes are moving higher and higher as the days go by.
OK, Bloomberg Horizons Middle East and Africa anchor Jemana Pasechi on the tensions, particularly on the Israel-Lebanon border, and how that ties back to the conflict, of course, in Gaza. Up next, silver prices hover at a decade high, spurred by the booming solar industry. Our deep dive on the silver spike is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, silver prices are hovering at levels last seen more than a decade ago, with the increase partly being driven by rising demand from the solar industry. Let's get the details then and bring in Jenny Chase, specialist in Bloomberg NEF's solar team. Jenny, thanks for joining us with the details on this intriguing story. Talk to us then about how much silver is used in the solar industry.
So last year, solar used about 16% of world silver supply, which is a fair amount. It's more than in previous years. The total demand for new build solar is probably about 50% more silver this year than it was last year. What complicates that a little bit is that there's a lot of solar module inventory sitting around the market from last year. But in general, yes, silver demand for solar is significantly higher this year than last year, which is one of the factors that's driving the price spike.
Is this, Jenny, is this about greater demand for installations? Installations growing, more of these solar panels and installations are being put out and put into place, whether it's on businesses or residential properties, or is it about the technology itself changing?
It's both. So installations of solar are growing about 20% this year compared with last year, which is a lot less than the manufacturers were hoping for, but it's still a fair amount more. But there's also a technology change. So last year, the dominant technology was something called PERC, which uses roughly 9 milligrams of silver per watt. But the chart here is the demand that's showing. So yes, solar demand is up about 20% year on year, but there's also the technology side. So last year, the dominant technology was PERC, which uses about 8.6 milligrams of silver per watt. And this year, the dominant technology with about 60% market share is TOPCon, which is a shade more efficient, but does use significantly more silver, about 12 milligrams per watt. And there are some other technologies that aren't quite major market yet that use even more silver. So yes, it's partly demand and it's partly the technology shift that are driving the increase in silver use by the solar industry.
OK, I pulled up a chart year to date. I'm looking at silver prices up about 22%. So my question then is, if silver prices keep rising, does this lead to an inflationary impulse? The prices of these modules rise as a result?
Well, right now, there is some other stuff going on in the solar industry, and solar module prices are the lowest that they've ever been. So they just dropped below 10 US cents per watt, which is absolutely unbelievable, given that the price of solar modules in 2004 was over $4 a watt. So modules are cheaper than they've ever been, but silver now makes up about 11% of the cost of making a solar module. So this is significant. And basically, the stress is entirely on the manufacturers right now, which are making very negative margins because you've got these super cheap modules and high costs.
Jenny Chase, specialist in Bloomberg NEF's solar team, thank you very much indeed for the deep dive in terms of how the silver price increase is tying in to the solar industry. Coming up, French bonds slip again as leaders face off in the final TV debate ahead of the elections, the first round on Sunday. We take a closer look at the market reaction. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. Happy Friday. I'm Tom McKenzie in London. These are the stories that set your agenda.
We created 15,000 new jobs. We brought on the position where we have 800,000 new manufacturing jobs, but there's more to be done. There's more to be done.
The only jobs he created are for illegal immigrants and bounce back jobs, a bounce back from the COVID. He has not done a good job. He's done a poor job.
Joe Biden stumbles through exchanges while Donald Trump makes false claims as the candidates trade barbs on the economy, foreign policy and their fitness for office in the first presidential debate. We bring you analysis throughout the show. Traders pile into treasuries as data points to a slowing US economy. We're going to preview today's reading of the Fed's preferred measure of inflation. Plus, European leaders nominate Ursula von der Leyen for a second term as president of the bloc's executive arm. We are live on the ground in Brussels later this hour. European futures pointing to modest gains after 3 straight days of losses. investors weighing up the economic data out of the US showing some cooling as we lead up to the inflation data. Personal consumption expenditures, it's the Fed's preferred gauge. It is expected to slow, but maybe not enough to be convinced for some Fed officials that the timing is now for a cut. Markets still pricing in cuts of around 45 basis points by the end of this year. And then you have the political overlay as well, with that presidential debate playing through, an analysis coming, and the markets moving on that throughout that debate. And we'll bring you an analysis. Currently, European futures then pointed to modest gains of around just shy of 0.3%. The FTSE 100 looking to add 19 points. S&P futures up 0.2% after some mediocre gains that came through yesterday. Nasdaq futures pointed to gains of 66 points, up 0.3%. Let's flip the board, look cross-asset then. You did see that rally for treasuries yesterday. That has started to ease in the session today, giving up some of the gains. 430 on the US benchmark 10-year. Yields actually up 2 basis points. We'll see how that fluctuates or adjusts around the inflation data later today out of the US. 106 on the European currency, on the euro, currently down 0.1% on dollar strength. $86 a barrel, close to 87 on Brent, up 0.6%. That asset class moving as well during the presidential debate. Also, Bitcoin was volatile during that debate between Biden and Trump. 61,000 on the biggest cryptocurrency, currently up just shy of 0.2%. But the politics are also in focus for us in France. And French bonds have slipped again ahead of Sunday's first round vote in legislative elections. Macron's decision to call the snap election has, of course, put investors on edge. The president's party trails both the far-right National Rally and the left-wing New Popular Front in polls. Here's what some Bloomberg guests have had to say.
This is unprecedented territory in French politics.
Even if the National Rally makes it into government, it's going to be a two-headed France, because the President Macron, will still be there.
The fact that Macron is extremely weakened, whatever exactly happens, so I think this is one of the few certainties that we have at this stage. That is pretty bad news for the EU.
We're already seeing that in Brussels. Is France diminishing both reputation but also influence?
Whoever will be in power will be constrained, in my view, by how the financial markets react.
We see that the electoral pledges of both far right or far left are evolving. So they do backtrack on some of their pledges, but we do still see fiscal slippage ahead.
Rational people will prevail ultimately, because the closer we get to the elections, the less buzz and the more fundamental votes. And in any event, after the 8th of July, things will stabilize in a much more clearer environment.
Let's bring in Mabrouk Chetouane then, Head of Global Market Strategy at Natixis, on how markets are positioning ahead of this first round vote on Sunday. Mabrouk, thank you very much for joining us this Friday morning. Is the worst priced in to French markets at this point?
Well, thank you very much for this invitation. The worst is not priced in, because we don't know exactly where France, the French politics, is going to be in a couple of months. So what we can see so far is a kind of, let's say, exaggerated reaction from the equity market, but from the bond market perspective, it's not that much exaggerated. We have to wait, and I think the investors are in this mood. I mean, wait and see what will be the outcome of the elections in 2 weeks after the second round of this snap election.
OK, and that's crucial, isn't it? We have 2 rounds. There's going to be volatility, presumably, particularly in the bond markets, between those 2 rounds. If we get to a point where it's looking clearer, and the polls are suggesting this again today, that there is a strong turnout for National Rally, they come through at number 1, they get a Prime Minister. What does a Prime Minister, a National Rally Prime Minister, and a majority in Parliament in France for the National Rally mean for this French debt market? What are we talking in terms of the spread? Currently at around 82 basis points over German bonds.
Well, if you look at the programs, I mean, of all the parties, I mean, the far left and the far right, I mean, it is quite crystal clear. If they succeed to apply all the measures that they want to do, it will have significant consequences. It will have significant consequences on the debt, on the French debt. It will increase, definitely. The deficit will continue to rise. And this is not the right moment to see the deficit, the French deficit, increasing in the context where we have already 5.5% of GDP deficit to GDP ratio in France. So clearly, what does it mean is, in both cases, increase in deficits. is it realistic, to see all these measures being implemented? The answer is, in my opinion, no, because when it comes, to the reality of the power, you have more constraint than room of maneuver to proceed. Both parties will be, in my opinion, blocked in implementing their political measures.
So what level for you marks a buying opportunity for French OATs, for French sovereign debt?
Well, again, it depends on the outcome of the elections. If we have no majority, no clear majority after the second round of the snap elections, it is clearly, the current level are, entry points, because it will mean that the country will not have, the new prime minister will not have room of maneuver to implement their policy, and probably the country will be, blocked from over the next, quarters and years. So clearly, these levels could, if there is no again majority, and it depends of the outcome of these elections, is already an entry point in my point of view.
Okay, I was speaking to JP Morgan's Karen Ward yesterday. She says she sees an opportunity in French banks, in French equities. She says they've sold off too much. You can look at sectors like the banks and start to add there. That is now an opportunity. Do you align with that view?
Yes, I do, because when you look at other segment of the market, for example, the French small caps, for example, they have even declined by 10% since the peak to the bottom. So 10% represent, what we have won, this year on the small cap segment. And I think it is clearly exaggerated from, let's say, an investor point of view, and it reflects, in my opinion, an opportunity in the French stock market. When we look at all the indices, and if we exclude, for example, the dividends from the indices, prices, they have lost all the gains that we have recorded since the beginning of the year. Is it, fair to say that the French indices are, has to display a 0% performance? The answer is no. So this is why we do think that there is, again, entry points even in the equity market. Despite, the volatility of this market, because the situation is not stabilized, and if there is a chance to see stabilization in the coming weeks, clearly it will be a very interesting entry points for investors.
Mabrouk Chetouane, Natixis Head of Global Market Strategy. Thank you very much indeed on the entry points in these French markets as we continue to weigh up the evolving political landscape ahead of that first round vote on Sunday. Thank you. Now, European Union leaders have nominated Ursula von der Leyen for a second term as president of the bloc's executive arm. Let's get more from Bloomberg's Oliver Crook, who has been across this story for us from the outset. Ollie, the top three jobs then now confirmed by leaders after the horse trading. It isn't over yet, though.
No, not quite, Tom. So let's just recap really quickly. So Ursula von der Leyen did get that sort of vote from the member states to become the Commission president. Once again, Kaja Kallas to run foreign policy and Antonio Costa to be the European Council president. This is obviously a very significant step because once you establish these top three jobs, you start to hand out the different portfolios for the rest of the EU and everything going forward. Notably, though, Tom, and this is what we were looking out for, Meloni had made her displeasure very, very well publicized before coming to Brussels, saying that the way that the top jobs were being distributed was not fair. She abstained from supporting Ursula von der Leyen in this vote. Viktor Orban, for his part, voted against Ursula von der Leyen. And then Meloni saying last night, very late when they wrapped in the middle of the night, saying that I think that Italy needs to make its weight count. Italy will get what it deserves. So that kind of throws us forward to a couple of weeks from now, Tom, when this goes to the European Parliament, and Ursula von der Leyen needs a full majority there. Without the full backing of Meloni, that is going to be a lot harder, particularly, Tom, since last time around she won by the thinnest margin ever by only 9 votes.
Okay, so that's the potential implications and the role that maybe Meloni and her party and grouping can play as these conversations continue. Meanwhile, leaders also firming up, adopting their priorities, Ollie, for the next 5 years. Have they changed at all?
Yeah, they have to a certain degree, because if 2019 was really the sort of when you saw that green wave of the green politicians being elected to the EU Parliament, that has totally ebbed. And, you know, climate is still going to be there. It's still going to be important because the center is still held and the transition is important to these political blocs. But it's fallen much further down the priority ladder. What we really see now is this is a sort of EU that is about defense and defense spending. And von der Leyen mentioned it in her speech last night, saying that they are going to need to spend €500 billion. That's €500 billion over the next 10 years to get defense to where it needs to be. Another final element, Tom, that I think is also sort of significant when we think about the power dynamics going forward in the EU. Germany and France apparently came to the table very last minute with a bunch of amendments that they were trying to ram through to get into the strategic agenda. And when France and Germany agree on something and try to get things done in the EU, generally people listen. This did not happen last time. They were basically smacked down, shut down by the rest of the member states. All of those amendments were basically killed, which really illustrates, Tom, some of the issues about the sort of potential mandates both in Germany and France, particularly with this vote coming up this weekend for Macron.
Yeah, absolutely. So how the domestic politics and the challenges for both those leaders in France and Germany is playing out and arguably weakening them on the wider stage of the EU. Oliver Crook with the details there on how that is all transpiring as they nail down at least the top three candidates, but the issues that still need to be addressed. Ollie, thank you. Coming up, Biden and Trump spar on geopolitics in the first US presidential debate of the campaign. We have a breakdown of those key moments next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. It is June the 28th. Just checking. Happy Friday. Now, returning to our top story today. Joe Biden, Donald Trump facing off in the first presidential debate of this year's campaign. The vote is not until November. A lot, though, at stake geopolitically for Washington and with its allies, with a major backdrop, of course, in terms of those conflicts in the Middle East and, of course, in Ukraine, competition with China and the question of NATO. For more on this, let's bring in Bloomberg's Kriti Gupta, who was up earlier than normal to watch this debate and pass what was going on. Let's start with Ukraine then. So important, of course, sitting here in London, but for the continent of Europe as well, as we watch to see how that conflict unfolds. And ultimately, of course, the durability of US support. What did we learn from both these candidates in terms of how durable that US support is likely to be in the future?
Well, it couldn't be more different in that you start with President Biden really kind of pushing back against President Trump's kind of refusal to support Ukraine. He actively said that, or support NATO, I should be more specific, actively said that he had an off-the-record conversation apparently years ago that insinuated that where he threatened to pull the NATO spending, and it was followed by Europeans spending billions. That's the verbatim, or at least the claim that he makes. President Biden pushing back against that and saying, would you like to leave NATO altogether and leave Ukraine to Putin, and not just the disputed territories in the east of Ukraine, but the entire country, to which President Trump said if the war was then done, could potentially be done before he's even inaugurated, if he indeed is elected. Lots of claims being made, but at the end of it, he's using that NATO spend as a reason for one, being kind of perhaps a little bit removed from the situation, highlighting the fact that there's an ocean between Europe and the United States, but also saying that NATO spend can help fund the deficit. So he's using this NATO story as more than just a defense story.
Well, let's take a listen to what both candidates had to say on NATO.
We have an ocean separating us. The European nations together have spent $100 billion, or maybe more than that, less than us. Why doesn't he call them and say, you got to put up your money like I did with NATO? I got them to put up hundreds of billions of dollars. You got to ask these people to put up the money. We're over $100 billion more spent, and it has a bigger impact on them because of location, because we have an ocean in between.
I've never heard so much foolishness. This is a guy who wants to get out of NATO. Are you going to stay in NATO? He's going to pull out of NATO. It may be a big ocean, but are we ever able to avoid a war in Europe, a major war in Europe? What happens if, in fact, you have Putin continue to go into NATO? We have an Article 5 agreement. Attack on one is attack on all.
OK, so comments there on NATO, comments there on support for Ukraine. The other issue, of course, geopolitically, that will be central to whoever takes office and continue to be central is what's happening with China. Do we get clarity on their stance when it comes to China? And also the question of tariffs.
We got something. I'm not sure if clarity is the right word to describe it. President Trump, of course, talking about the fact that he wants to be tough on China. This is not a surprise. Both presidents have talked about creating an equal playing field. The approach is a little bit different here. Again, this is coming back to that deficit spend story where he's saying tariffs on China could help kind of close the gap on the spending story in the States. He didn't really go into what the tariff picture would actually look like in a Trump 2.0. He did talk about the 10% tariffs, to which President Biden
Which is across the board.
Correct. And also also sort of already exists in various industries as well in the state. So how much of that changes, we don't know. But we do know in previous interviews with Fox News, for example, he's threatened as high as 60%. On that front, we didn't get much clarity. President Biden really pushing back and saying, as much as we do have to get tough on China, it also becomes an inflationary story. That is the extent of where they went on China, which is surprising given, especially for an international audience and the two largest economies in the world, it was more of a pivot point. Critics of that would say their policies on China aren't actually that different because at the end of the day, in Biden's first term, he didn't actually remove any of the policies. President Trump saying that's because the funding is simply too big to move.
Yeah, some Democrats critiqued, didn't they, the detail and the imposition of tariffs on China to the extent that they came through from the Trump administration, but they have not been rolled back, to your point. But other China analysts would also say that, in fact, the Biden administration has taken a tougher line in terms of particularly the restrictions on technology and key technology. So that's on China, and we touched on Ukraine. This is the policy, and this is where you get into the details, and this is really, really important. But there's also a question of style as well as substance, Kritty. And some of the headlines today, the focus on the stumbles, the missteps coming through from Biden, but also the mistruths, the lies, frankly, from former President Trump. Talk us through what we heard and what we take away in terms of how the positioning is, the imagery, the symbolism, and how this cuts through to voters.
Well, this was a real test for both presidents. And remember, it's important that the debate structure is noted here because this was 90 minutes of standing. They had pen, paper, water, no consultations with their debate teams or campaigns, muted microphones. And they really had, it was a test of endurance for President Trump, who is 78 years old, and President Biden, who, of course, is 81 years old. They talked about their mental stamina, their mental competence, which resulted in a very interesting conversation about how they both do at golf and taking their physicals in the White House during their respective first terms. That being said, from an international perspective, and I think what needs to be said is as soon as the debate ended, there was panic among the Democratic Party. And you saw reports from a lot of various American media channels saying there is now concern of whether or not Biden's performance in this debate or lack thereof of energy created.
Who do they go to if they have to change candidate? I mean, how realistic is that right now?
Well, that's the concern, because on the other side, to balance this conversation out, you did have plenty of falsehoods, to your point. And again, in this debate, there was no live fact-checking by CNN to really keep the integrity of the quick, snappy answers and make it a civilized discourse. So things like former President Trump talking about the definition of abortion with Roe v. Wade, President Trump talking about whether or not riots in Charlottesville, which really instigated or is seen as the instigation of the broader kind of far-right movements, and eventually the Capitol riots as well. He's saying that really wasn't one of the starting points. He even debates his own role, of course, in the Capitol riot, saying that this was a civilized and even patriotic thing. So again, a lot of things that weren't fact-checked in the moment, but in retrospect, to your point, a lot of independents who aren't diehard fans of either candidate are really struggling here with these two choices.
Kritty Gupta, thank you very much indeed. Bringing us the details, of course, on the first US presidential debate, the next one in September. We continue to watch how that story unfolds, of course, and the polling for both candidates. Now to some other stories making news this Friday. In the corporate space, Nokia making its biggest acquisition in 8 years, buying the networking company Infinera for $2.3 billion. The cash and stock deal values the Californian firm at a 37% premium to its trailing 180-day average share price. Infinera provides networking hardware and software to internet and mobile phone operators. Nike shares fell in late US trading after a full-year outlook that missed expectations. Wow, look at that drop. The world's largest sportswear company sees revenue declining in the mid-single digits in the current fiscal year. Much of the sales miss will be due to a weak first quarter when revenue is seen dropping 10%. CFO Matt Friend says they're transitioning the product lineup to reignite consumer interest. And L'Oréal is expecting slower growth for the overall beauty market this year as weakness in China weighs on sales. The cosmetics group told investors they see the global beauty market growing between 4.5% and 5% this year. China has long been a growth engine for L'Oréal, with consumers snapping up its high-end cosmetic offerings. Plenty more coming up, including Roaring Kitty. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Friday. A big data point for us today, of course, is the PCE indicator, the Personal Consumption Expenditures Index, coming out later today in the US. We know it is central to how the Fed thinks about when it should go with its first cuts, with markets pricing in about 45 basis points of cuts by the end of this year so far. That could, of course, adjust today. This chart showing the work that's been done in terms of PCE and the growth that has come through and the slowdown, in fact, in the growth. Now, Bloomberg Economics sees this being the slowest print yet this year. Core PCE, the index is expected to come in for the month of May, month on month. It's seen increasing just 0.1% versus 0.2% in the previous month. Year on year, it's seen slowing to 2.6%. Versus 2.7%, still away from that target of 2%, of course. Bloomberg Economics, by the way, sees that the disinflation narrative in the US stalling in the months ahead, but they still see 2 rate cuts from the Fed. Let's flip the chart and look at the quarterly positioning with flows into those 20-year treasuries and that ETF, the TLT. $3.5 billion of inflows. Some discussion of as to whether this is the rebalancing, maybe it's a safe haven shift. And, of course, the context being that stocks have still outperformed bonds this quarter. But you have had those inflows, which is worth noting. And before we leave you, Roaring Kitty back with an eye on Chewy and Petco. Yes, Keith Gill going fundamental and posting a picture of a pooch. And you saw a massive jump in the shares of Chewy and Petco. They then moderated and actually ended the session lower. So, again, speculation that maybe he's got some skin in the game here. Ryan Cohen, by the way, of course, the founder of that company, Chewy, also, of course, the CEO now of GameStop. On Monday, Markets Today gets a makeover. Join Anna, Guy and Critty for the opening trade. They will bring you everything you need to know as markets open across Europe. 7 a.m. London time, Monday. This is Bloomberg.